Hi guys, Lee Gettess here with the market sense for the week of May 2nd, 2017. Charts from this presentation are given to us from the Trade Navigator software in Genesis. Love that stuff. This is going to be a tough week overall. This is the weekly bond market chart here, and we were kind of looking potentially for support to come in the 152 area, which is down here. They're actually down there right away Sunday night, and they've spent some more time down there. And it looks like they've held it pretty nicely. That should be good for a move up to, well, let's call that 153.12 there, the middle moving average. And it may be a lot better than that. They could be up here to 154.16 pretty easily, because that still would leave them well below that previous swing high. Now, the difficulty of this week. We have both an FOMC meeting and a monthly employment report. The meeting will adjourn Wednesday afternoon, and they'll issue some sort of statement, and then, of course, the monthly report on employment is Friday morning. Boy, awfully tough to know how to control risk when you got stuff like that. And just because it looks like they've held support now and are going up doesn't mean we can't see them down here at 148 if they don't like what they hear. So kind of a tough week, but at this point, looks like they're holding support, should be heading up at least to 53.12 and possibly quite a bit higher. Stocks, well, they're not doing much. While bonds went down and held support and seemed to rally, the S&P's been really quiet, and this is particularly surprising. Well, I guess it's not surprising given what we have this week, but it is surprising to be this close to all-time highs and just sort of doing nothing. I mean, blow through or get rejected, but just sitting there doing nothing is a little bit surprising. We've got resistance, which is kind of like at a marginal new high. I mean, we're, let's call it the 23.95 area. Pretty obvious resistance, and I kind of dislike stuff that's that obvious, but hey, it's resistance until it gets broken, and right now it's still acting as resistance. If they're going to go higher, the support could come in here as high as 23.72. Of course, they may not even get down there, depending on what they hear from the Fed Wednesday. But they could drop down even to the middle moving average here is 23.53. Going that low would not be terribly negative. I mean, they could still go back to new highs from there. But again, Fed meeting, monthly employment report. This is an analysis. We're just kind of guessing how they're going to react to that stuff. And, I'm not a real fan of guessing. So that's what we've got for you today. I hope you can find something profitable to get yourself